Yo, yo, what up? This is nuts, eh? Who could have predicted this? Yeah, I did. Sorry, I'm gonna toot my horn for a little bit because I feel like in The Big Short, can't remember his name. It's played by Ryan Gosling, but he's like, I took a wrath of shit and it sucked, but I was right. There's a lot of people I feel like that I kind of went back and forth with that were just like, I've been there before. As the market's like just continuously selling off and longs just aren't catching kind of thing, you're just as a newer trader, you just get lulled into like it's just gonna keep going down and then we're gonna, and all the bear sentiment that happens and stuff. It's very easy to fall into that pattern, but you really gotta look under the hood. And under the hood, this thing was very much set up to squeeze. So literally, yeah, almost 2 weeks ago, sent it to all-time highs. That was kind of around, it was around there-ish. I don't know. So it was a little early for sure. And I didn't know when the squeeze was going to happen, but I knew it wasn't just going to drop off kind of thing. I said this would be a perfect time for a quick parabolic rally. That was just over a week ago. 75.12 flips and holds, then it can squeeze aggressively. And then this is just me talking with another member. I was just like, yeah, we're talking about midnight open, but I said, I think we're about to see a face melting parabolic rally to finish off this market. That was August. That was literally the end of, that was Friday, I think, right? Yeah, it was literally last week. So it was literally right before it happened. And then he was like, really blow off top. And I was like, yeah, possible we just rip from here. So anyways, there's many instances. Those are just some quick ones that I found. 75.12, I said in that one of those, I said 75.12, if it flips and holds, could squeeze aggressively from there. Well, guess what? We just gap over it. So it gave a quick little sell-off on Friday. And then the market just said, you know what, we're just going to go right over you. And then continued up from there. I really wanted to see this just bottom of this golden pocket tested for long, 75.42. I was very frustrated that didn't get hit, but whatever. It's all good. I caught little chunks of these, nowhere near the full amount, even though I knew we were in for a parabolic rally. I do have some options that expire August 14th, so I'm very chilling. There were like 767 calls, so I'm like deep in the money on them. But I think I'm gonna, I don't know. I'm like 50% out, but I don't know if I'm going to continue to hold them or not. Just because, yeah, I do not know that this could work out multiple ways, honestly. So, for instance, let's just get this over with. What is this? This is a gamma squeeze. What is a gamma squeeze? You're going to hear about it a lot. This is literally a textbook example. Like, I'm not kidding. They will literally put this in textbooks. I guess if they don't use textbooks anymore, but in teachings about trading financial instruments and what can happen, especially in finance, when dealers are even caught offside, what they're forced to do, how that contributes to a gamma squeeze. So if you look at, if you're on Mentor Q or whatever you're using, if you track gamma, GEX at all, there was a large concentration, mainly on SPX and SPY, below 7,500 area. There's a huge concentration of put contracts, basically bets on the market to go down. There was a lot of them. And who was holding them? Well, most likely retail. I even mentioned this last week. Literally in that last video, I said, Jamie Dimon, whenever he comes out and says something, do the freaking opposite, because he is like a walking inverse. He almost has a higher hit rate than Jim Cramer, which is that's saying something, obviously. I think it was last week, midweek, he said, I would not buy stocks here. Of course, he's going to say, haha, I meant down here. I meant don't buy them here, buy them there. Obviously, didn't say that there when we did that manipulation on Wednesday. I can't even remember what news that was, but probably Iran related. But yeah, so he says that. I literally said knowing that he said that, I was like, I would not be a seller. He never adds fuel to the fire when it's going to continue going that direction. He's adding fuel to the fire to literally pile retail in on one side to add to the bear sentiment, so that him and all of his buddies can just absolutely profit from a face melter like this. And so, yeah, signs of this were, if you zoom out, I swear if you don't, Like, sure, you don't need it, but I just don't know at this point why you wouldn't want some type of order flow program. I just don't get it. Because there's that is interesting. I'm telling you, this is crazy how this is working out. So zoom out into the last couple of weeks, even just the last week. What do you see? End of the session, just skyrocketing in Delta. It's just climbing. This day, it literally got up to, look at that. It's like off the chart, 40,000 positive Delta. That was actually 2 combined sessions, I think. So, don't know why that happened. Anyways, so huge amount of futures contracts on ES being bought at these lows. Lots and lots and lots. And what do we know if we're checking the commitment of traders report, the TIF report? Institutions are very net green, very net positive. They're buyers right now, at least on ES futures. They've stayed very positive this whole way through. So no sign that they're dumping. So yeah, anyways, this is a lot of times they're fighting other funds, leverage funds, people trying to capitalize on like a significant downturn in the market. Even Ken Griffin, that was legendary too. Ken Griffin, head of Citadel. So you have the heads of Citadel, heads of JP Morgan, kind of trying to stoke bearish fears. Ken Griffin was talking a lot about how the Fed might do a surprise rate hike. That would be, terrible if that happened. Of course, that didn't happen. But anyways, yeah, he was saying that, and that him doing that put enough fear in the market where enough and tech was just getting sold off aggressively. A lot of AI stocks, a lot of companies. So when you think of rate hikes, what does that affect? That affects interest rates. What do interest rates affect? That affects companies that are largely not profitable, and they are like hyperscalers. They're the product of hyperscalers. They're the product of invested money based off of borrowed money. So if borrowed money gets more expensive from interest rates going up, that is freaky for a lot of those investors. And they might be too exposed and they don't like that. So then they actually start to unwind their positions. And that caused enough panic in the market for that small fund, small in quotations, situational awareness fund, I think it was called, where it was essentially it was a fund that was leveraged out the bum long on AI. It caused them to actually have to liquidate a large chunk of their holdings. I think, like tens of billions. And who bought it all up? Ken Griffin, same guy that stoked those fears about interest rate hikes. He said, "Oh, you have a liquidity problem. You're over leveraged, and your whole fund could go under if you don't settle these trades. Basically within the first hour, I got you." He ate all those trades up for pennies on the dollar. Maybe not pennies, but quite like an insanely discounted rate. And now his AI portfolio is even more stacked. He has even more shares. So it's very interesting to see what's going to happen from here. So what does what does all that do? And how does that create this gamma squeeze? Well, so retail is all piled in at the lows. They're buying put contracts like crazy. They're betting on the market going down. A lot of selling going on. So when they're buying put contracts, a lot of those put contracts are going in the money. They'll be profitable way lower. So if you looked last week on SPX, on SPY, QQQ, NDX, there's a lot of put contracts, a lot of negative gamma, negative GEX concentration below 7,500 area. Can't remember what it was on QQ or whatever. I'm more on ES and SPX right now. And so there was a huge concentration of it. So if price actually went down there, and there's a lot of people posting heat maps showing the large concentration below, using it as if it was going to be a guide, a map of like, yep, that's where the market's going to be, like this day or the next kind of thing. That's not how it works. If the market just went from node to node of concentration of options contracts, we'd have a money printer and we'd all be stupidly rich, and institutions would be, it just wouldn't work. So what happens in this case? Well, those guys, Ken Griffin, Jamie Dimon, Well, then all of a sudden they tell the news train to start going the other way, and then all of a sudden Trump gets a little, probably signal in the form of a freaking red hat symbol in the sky, and that's his sign to then start saying, oh, Iran gonna make a deal again, and blah blah blah. We've heard it all before, so the news cycle starts to flip, starts to go in his way. The Fed obviously does not cut. They do not raise rates. So they hold. So that is good for now, especially when the market was expecting almost by that day, they're expecting a surprise hike. So that's almost another instance of relief. So then there's starting to be some more buying. As that buying happens, obviously all those futures very much in the green from all here. Now these guys are starting to get more aggressive. They're starting, instead of passively buying, instead of just limit orders getting filled, they are hitting market buy basically. So they're just now aggressively pushing price up. That's how price moves, is by market buys or market sells, orders getting executed. And so that's price starts moving up as well. And that puts all the people that had put contracts that went in the money deep in the 7,300 area, they are far out of the money now, and they're caught very offside. And if they're largely retail, which at this point we can assume they are, they're not going to be holding. Their contracts, they expire too quickly. Retail doesn't buy leaps. They're buying contracts that expire within a week or two, trying to capitalize on some short-term moves that they think will happen that don't. Ends up going the exact opposite way. All of a sudden they're freaking out. Their contracts the premium is probably cut in half, if not more. So they're out a lot of money. So they're like panicking, and so they sell out to close. When they sell out of those contracts to close, what happens is those contracts, what happens in a put contract when it's sold to close is the underlying shares get bought back. Because when you buy a put contract, you're essentially borrowing the shares for a premium, and then you're selling those shares on the market. So when you sell out, you either capitalize or you lose on the premium. In this case, they lost on the premium, but the shares get bought back. So that in turn adds to buying pressure, continues up. On top of more news today as well, you see Trump saying that now we're hours away from this, Strait of Hormuz being open. So the news cycle, everything is in line, adding to buying pressure. So now market makers, they are starting to get caught offside. Both days the call wall was below us. We're quickly moving price above. And what does that cause them to do? So market makers, they're the guys selling these contracts, right? They are always trying to remain delta neutral, because in delta neutral, they're still a money printing machine, because they make money off of theta decay, which is essentially the time of expiry of the contract. The premium naturally decays, and they make money that way. So they do not need to be directionally exposed to make money. But if they are caught off guard like this, where the market is moving so fast, violently in one direction, in this case upwards, they will be forced to in a feat to remain delta neutral. They need to buy the underlying shares to capitalize on the gains that way, to counteract the money that they're losing for all these people that have bought call options that are deeply in the money. So all these people that bought these call options are making money hand over fist, and dealers are going, oh no, we're caught off guard here. So we need to start buying the underlying shares to capitalize on those gains. So that can essentially cause this very, very massive squeeze that essentially just looks like a straight line up, which is essentially like, there you go. That's what happens. And it doesn't really start to unwind until we start to see a lot of realization of the gains of these call options. So that'll obviously happen into market close, but it can continue on for days and days, of course, too, right? So that'll happen to market close, and then into the end of the week, or obviously until we get a change in sentiment and news. So that could also be something that would happen. I do find it very interesting. I have the standard deviation marked out on ES. There was a little SMT. It was a lunch hour SMT actually with NQ. Just what happened there. So I marked it out. That was a good manipulation, and started to show some reactions around the 2.5, which I like. But again, we're in a gamma squeeze, so I do not expect this to just chop at all. Really, buyers are absolutely completely in control as long as everything stays on their side. But I do like, again, for standard deviation, we're seeing rejection there. So it is possible that we either, so there's multiple scenarios, right? There's so many ways this could work out, which is frustrating, obviously. I really just like it to come down to two. So you got to stay nimble. So it is possible that we're at the 3. So this is another standard deviation. This is the one I care about more. So we're at the 3 standard deviation from this manipulation of these lows on NQ. We marked these lows on NQ, right? I didn't mark them on ES. Marked these lows on NQ because NQ made the SMT. It took out the June lows, which ES did not. So we see it stalling at the 3 standard deviation. That's a good sign, right as ES is stalling at this 4. It's very possible, because obviously I would love for it to just like trickle down, and then tomorrow we make a high, we manipulate right into the TR pocket at the 4.5 right there, and then sell from there. And then Thursday, what do we get? We get a continued sell from there, and then this market's cooked. That is like your most obvious sell case in that scenario. And there is a bit of an argument to say like that would be in agreement with that, because very interestingly enough, we have this parabolic move up today again, or just a continuation of parabolic move. But look at futures. You know, futures actually like look how far down we are. We went from 10K positive on the day, right? 11K down to -5. So very, very possible that we are actually seeing some type of interim top. I mean interim as in like just for like a day or two kind of thing. And it is very possible that we actually reject from here, NQ rejects from here, and then this kind of brings a large move downward to retest this area. That'll be very interesting. We will see. It could even dip lower, right? Could even, essentially what I would really want to see, I would love to see, if we're going to continue longs, I'd love to see 76.40 area hold, maybe 76.50. I don't know, anywhere around here. I would love to see hold, and then we continue up from there. And then if we continue up from there, then I would fully expect. Well, I wouldn't say fully expect. I would like rejection from there, and then I would like to see something happen here. Either we hold, and then if we hold and start to break free, then at that point I won't even look at this standard deviation path anymore. I'll say this is finished. This move is complete. You know, we had a large retracement, so I would like to see, ideally, if we actually hold maybe into like 75.95 area along there. If we come back all the way through here, yeah, so if we get all the way down there, then I will really look at the possibility that this will just hold and then we'll flip. However, this could be very key as far as what type of reversal we'll have, because if we're going to have a large reversal, if we're saying this market's cooked, I'm going to assume that we're going to have quite a manipulation move that then results in us distributing lower. So it could also make a lot of sense that the market rejects here, comes down to either 76.40 or even 7600 area, and then we see one final move rip up. And in this case, it would be like NQ actually doesn't go down as much, but then actually rips up to all-time highs at the same time, and then we see a move down from there. And then I would look at, I would look at a large distribution lower. Kind of, I'd want to see us really just start to nuke, and I'd want to see it always happening kind of during New York session. I don't want to see any gaps being left above. I don't want to see any gap downs kind of thing. You know, if we're expecting this market to just sell off from there around 7,800, then I don't want to see any like gap downs. I want to see us at the highs continuously during New York session, and then just selling off right at the start of the session kind of thing. That would be almost a little too obvious. We'll see. Blah, 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 so much, you know. So from here, we could also see, this is the argument, is just that we actually reject here and we hold again this 76.40 area, and then we just absolutely rip right through. That could be another thing. We could also see like a large SMT maybe with NQ, but I would look for that to be a possibility as well. So I don't know. Yeah, so many ways it could work out. I think honestly, your pivots are, let's just mark this out. Your pivots are key areas to hold for buyers and key areas to really sell through, obviously for sellers. So that's why it's a freaking pivot. Daily price. I would say right there, 76.20, 76.40. But also very close by, I would say like 76 to like 9.5. Oops. So yeah, that would be another key area too. And then obviously 7,800. So the only thing I just don't like is it just seems too crowded. You're gonna have a lot of people, right, that will look at this and be like, they'll also agree and they'll say, yeah, this is just a blow off top and we're about to sell right through. I don't know. It's kind of tough to say. I'm still trying to gauge the sentiment on it to see. I feel like a lot of traders, if they're seasoned traders, they'll look at this and they'll see this possibility. They'll see that this is just a gamma squeeze, but that this could quickly turn around, and we could just sell off from here. And this is just meant to manipulate retail again to the other side. And then because they love to do that in a large reversal like this, if we're really zooming out, if we're looking at what a large reversal would look like, it would always look like basically it would have some type of blow off top, gamma squeeze, capitulation, whatever you want to call it. So it'd be like accumulation, manipulation is also into there, and then distribution lower. This would just be the start of your manipulation. Whereas a lot of people, a lot of retail are looking at this as manipulation distribution. And that is a very like A D, right? So that's what a lot of retail will look like, or will look at this like. And it's very possible. I would just simply wait for the confirmation of holding this area, holding 7,800, and then continuing. If it holds and flips, or if it just quick little 1-2 and then takes off, like be long, continue that long for sure. But I think this is a very dicey area to continue to hold longs. I think it's very interesting that we're getting into the end of the session and you're seeing Delta just like crash like this. But again, ES is still very, very positive. So now they're just flipped. Now you have ES, Delta in the negative, and you have NQ in the positive. So this looks again like Tech Rally 2.0, right? So yeah, I don't know. I can see it both ways. I'll for sells, I'll look for confirmation on the tape. Obviously, I will look for basically a large seller to come out right around 7,800, and really take control. I want to see like we're talking 1K lot sell orders coming in, and I want to see the price respected after that, obviously, because that would just show me that any aggressive buying they're absorbing as well. If I don't see that, then I will not be getting into sells at all. I'll be very wary that this could still continue, kind of thing. So we'll see. But anyways, yeah, I think I like that this is finishing out at the 4 and this is at the 3 standard deviation of both those moves, even though they're from slightly different dates and like times. The fact that they kind of those levels line up is very interesting to me. So and we're just right below 30,000. So we're at a choke point for NQ as well. And yeah, we're just in price discovery for so I think honestly a retracement from here would be very valid. But then I wouldn't hold on to anything too long, because a retracement could end very, very quickly and then we could actually just continue higher. But yeah, likewise, I wouldn't hold on to longs too long until we are very clearly holding the 7,800 level. I think I'm probably, I'm going to be like 80% out of my options, I think. Just seeing how futures is acting. So we'll see. Earnings, big dog, NVIDIA on the 26th is the end of the month. We got bank earnings around that. this is another tough thing for me too, right? It's really set up. It's really set up for a strong sell. It really is, because I mean this is assuming just news wise. You're assuming that yeah, it could really be bad news coming. I don't know. You have jobs reports this week. You have ADP non-farm, then you have non-farm. You have employment rates. Lots of stuff. Basically, that could really start the end of this kind of thing. That could really turn this around fast. Non-farm definitely has the ability to do that. The only thing is non-farm comes in pre-market, right? Yeah, 6:30 a.m. for me. So that is an hour before. That's pre-market, an hour before. So we'll see. We'll see if if it was kind of bad news, but then we rip back to the highs and then reject, then I'll definitely be a seller from that area as well on non-farm. Next week we we have CPI too. CPI, PPI, we have core retail sales, freaking consumer sentiment. Oh, also going back to this week, Friday. Is it not on that week? Maybe it's not. Right, let me check. Where's consumer credit? Yellow folder. Sneaky. If you're following data, consumer credit is in the dumps right now. So that is a sneaky little thing that could also add to it. But yeah, CPI next week, that would be very interesting to see, because CPI was a nothing burger last time. So if this time it came out as a really bad surprise, that would add to it. And then you have retail sales. I'm gonna bet those are down. Consumer sentiment, gonna bet that's down with prices and stuff. Like, this is really just set up to just absolutely murk this parabolic rally and just turn it around within days. So I don't know. Just be nimble every day, level by level. That's what I would watch, kind of thing. So I'm definitely going to be more active now. Now that it seems like we're finally starting to make a move out of this range, whether it's a manipulation to distribute higher, or if we are currently in the manipulation right now to then have a massive move lower. We will see. There should be lots of signs that reveal it. McClellan oscillator not showing much right now. Again, this is McClellan and advanced decline. Just think of it as like the culmination of stocks being bought and sold, and then also the amount of stocks in any given index making higher highs versus lower lows. Commitment of traders report, as always, something that we follow. And if we know anything from last week, let me just refresh this. Yeah, new change. Still about a milli in the delta positive. So next week, if I saw this drop off to like 700s or something, that would be another confirmation. But I think from what I know about commitment of traders, like, if you want to play it safe, wait for there to be a drastic swing, and wait for there to be a drastic swing in basically the way these asset management institutions are positioned. So wait for this to drop down significantly. Then you can be like really sure, because you'll never see this like front run really. There was a trader on I think he's more an investor, I guess, but he basically talks about like when he sells, versus buys for cycle bottoms tops, and he follows like old school like TIF report, or sorry, commitment traders report, just non-commercial, commercial. But now we have the TIF report, so asset managers institutions. So yeah, wait for that confirmation to really be sure if you're thinking about actually selling like long-term holdings, like any of the big Mag 7, all that kind of thing. I wouldn't get too crazy before that happens, because generally when the market tops, it is peak euphoria, and we are not there yet. We are still, like, I think that we're in a confusing area, because obviously the market's ripping to all-time highs. However, sentiment has never been lower in a lot of cases. You have consumer credit, all that's like really bad. Some of those are precursors. But overall, like the Iran war, the Strait of Hormuz, like all those fears, like they're still very much real. So it would be very interesting to see the peak euphoria of this market actually be like, actually be the Strait of Hormuz opening and everything flowing, and the RGC makes a deal and everyone's holding to it and Israel isn't, screwing anything up, kind of thing. If that all happens, you can probably say that we'll see some significant type of top pretty soon after that, because you really want to see that peak euphoria kind of thing. And I think we're actually just coming out of like kind of a peak fear market. So anyways, that's enough rambling. We're getting to the lengthy end of a video. Yeah, 7,800, watch it. Very interesting, actually, if just from here at this 77, whatever, 70, 80 kind of thing, where the market's about to close. I think, let's take a look here. That'll be very interesting if this is just kind of like a quick little interim high. I could definitely see it because, yeah, some aggressive sellers hit the tape there, saw buying into the highs, defended. So we will see. We will see. And then CVD just crashing. Look at that, like on ES. So yeah, you could actually take a, I'm not sure how quickly people see this video, but this might actually be, if this level holds, you could just be a quick little connecting flight short, but I don't know. Risky, risky when we're in a gamma squeeze being short, right? Just don't know when it's going to end. Yeah, anyway, 7,800, I think good level to watch. If we reject cleanly from this level and actually retest a lot lower, then I won't place as, we'll see how much weight I place in 7,800. Could actually go through and a bit higher, up to like 8K kind of thing. So higher than most people think. Yeah, I think that's it. No, nothing else to review. No, I think we're good. Yeah, that's it. That's all. Good luck. A lot of big news, a lot of big folders coming up, red folders, earnings, NVIDIA on the 26th, something to watch. Definitely worthy note that this month has opened high, not low. If you think about it, open high, low close, right? Where was it? Well, if we just go on SPX. So the first day would have been the 3rd, I guess. Yeah, 3rd, straight up. So open a high, low close. I don't know. That's it. There's another freaking argument for, being the highs, right? I don't know. It's like, what are the odds? What are the odds that it just doesn't? I don't know. I'm not sure. We'll see. Yeah, interesting. TR pocket, SPX, struggling at the highs. I like that. We will see. I would love for it to, we're going to continue higher. I'd actually love for it to come and fill this gap below. So we'll see. Yeah, that's it. Good luck. Trade safe. Bye.